warm welcome to you as you join us on today's episode of Tax Matters. You can see that we are upbeat. November 2017 has come to an end, and that means that we have only one more month remaining in the year 2017. Our prayer for you, as always, is that we will all collectively witness the year 2018 and that our businesses will grow. We will have peace in our private lives, and you will pay your taxes. This is still trending. Voluntary Assets and Income Declaration Scheme. We can't get out of talking about it. July, August, September, October, November. 5 months gone. December, January, February, March. 4 months remaining. Declare your assets, declare your incomes faithfully, truthfully, and your sins will be forgiven. In the last 2 episodes, we've been telling you the story of the Abuja workshop, the training workshop that was held for tax consultants engaged in advising clients who want to participate in VATs. That was held on Thursday, the 9th of November in Abuja. A Lagos edition has since been held on Friday, the 24th of November. And as we discovered, the speakers at the Abuja event were pretty much the same who spoke in Lagos, except for maybe 1 or 2 persons, including Mr. Taiwo Yedele, a very good friend of this program. So what we are about on this episode of Tax Matters is to serve you the 3rd installment of the Abuja story. Mr. Ayosalami of KPMG spoke at the Abuja training workshop about participating in VATs, practical guidelines.
The benefits far outweighs whatever costs we think we might incur in trying to comply with the provision of the law. Waiver of interest and penalties, immunity from prosecution of tax offenses, and then immunity from tax audits, option of spreading the payment of their standing liabilities over a period of time not exceeding 3 years. And I think this is magnanimous on the part of the federal government, and in particular the FRS, because under the tax law, the deadline for payment of the taxes are clear. And for the government to come up and say, look, we can extend this for a period of up to 3 years, I think they need to be commended. Now, what are the practical guidelines? Which is the substance of the presentation. Just as the FRS is doing data mining, as presented by my colleague earlier on, the taxpayer too also need to do extensive data mining. How? What has been my tax history, even though not complete? In other words, for the past 7 years or thereabout, have I obtained tax return certificate? I need to retrieve that. What were the sources of my income in the last 7 years? I need to ascertain that. Did I have any loans which I used to build a property for myself, a living property, or a property for investment purposes? I need to also obtain that information. Of course, even at the corporate level, you also ask yourself questions around where are my audited accounts? And if those accounts were not audited, what about my management account? These are the information you need to be handy with in order to participate in VATs. It does not stop there. Even if you obtain loans to build a personal property where you live in, you need to obtain that information and get it handy. Your FS, your bank statement, and so on and so forth. Those are the kind of information you need to pull from the archive and be prepared to participate in VATs. Having done that, you also need to establish liability. Now, this is where the professionals comes in, and this is where you and I come in. Tax is not for every Dick, Tom, and Harry. It is for professionals because it's guided by the law. So your assistance with them is needed in assisting whoever wants to participate in VAT to establish whatever liabilities it is expected to pay, which was never paid or short paid in a way. So you need to assist your client to ascertain this in preparation for participating in VATs. And the 3rd process point there is complete and submit the declaration forms. If you go through the VAT website, there are various forms available, particularly on income taxation. You have the VA1 for personal taxation, personal income tax, and then VA2 for corporate income tax. You then need to guide your client through on how to fill this form based on the data he or she has mined during the phase 1 under data mining section. For corporate enterprises as well, you also need to guide them through based on information contained in the audited accounts or management accounts and other supplementary information that may have been provided to you as a consultant. But bear in mind also that under the executive order, the FRS has the power to then raise an assessment based on all those submissions, even if you have indicated what your tax liability should be. Okay? So under the scheme, you submit all those information, potentially or perhaps with your tax exposure, if you're able to do that with the help of your consultant. And then at that point where you submit, the FRS then takes a look at these streams of documents or information you provided on the appropriate forms and then help to ascertain the tax exposure for payment. There's a point we also need to clarify here. The fact that you have declared an income under VAT, it is not automatic that that income becomes taxable, because the VAT will be operated under the existing tax laws, like the Prof has already said. Clearly, even if you earn income from offshore, there are provisions in the law that says such income, if it's in form of rent, dividends, or interest, if brought into the country through official channels, are exempt from tax. But under VAT, you are still expected to declare such income, right? So the fact that you're going to declare income under VAT is not automatic that it becomes taxable, but rather it provides enough information to the FRS to track such income for national development.
You must now by now be wondering whether the participants at the workshop did not say anything, or maybe you have questions already bothering your mind. Oh, there was plenty. There was a robust interactive session at which the participants raised issues, asked questions, made observations, and we tell you many of the things you're about to hear will address your concerns.
The frequently asked questions are already on the website of VAT. There are 28 in number, which you can download, and I believe most of us have already done that. And we have also seen the answer provided for each of the questions. So in this section, we just want to make this period to look at questions that are even outside the frequently asked ones, so that we will be able to give answers. And even if you cannot give answer to all here, you can always contact the office of FRS, headquarters, or any of the offices nationwide. Also, the state internal revenue offices are also available for answering some of the questions.
My question borders on the period after the moratorium. I foresee a situation whereby there will be a floodgate of litigation against tax defaulters. Have we taken into consideration the slow legal system that the courts, as we speak today, are already overbugged with work? Are there any mechanism we are thinking of putting in place to ensure that those people, those defaulters will go after at the end of the amnesty period, that they will not be caught up in the judicial system, which is already overbugged?
The first question I have is on the confidentiality of information disclosed. Some of the senior citizens want to have an assurance that those information are going to be kept as secret as possible, and that people are not going to be running after them thereafter. Two is the issue of period prior to 2011. Some of the states now, we have cases of coming up with tax investigation even as far back as 1999. I want to believe that the essence of faith is to make people to rectify their tax matter and ask them to sin no more. So what is inland revenue, what are they going to do on period preceding 2011? Then the faith order made provision for waiver of penalty and interest, but the frequently asked questions is saying that the interest will not be waived from January to March 2018. Will that not be a contradiction to the faiths? We also have cases of people asking us that if they have made declarations to some statutory organization before, and now they want to make another declaration that conflicts with those that have made before, is Inland Revenue going to share that declaration with any other agencies outside for tax purposes?
And these pieces of advice.
There's a lot of focus right now on the formal sector, the so-called rich and the high net worth individuals. But for us to really hit that big mark, I think we should also start looking at the informal sectors. I mean, the tax system is being done on a progressive basis. That means that you pay based on your level of income. So if you also look at the farmers, the traders, the artisans across the country, I think we would also make more traction, because if you look at more developed countries actually doing this as well, they focus both on the formal and informal sector, and that's why a country like Brazil was able to report about $14 billion, and even in the last scheme that they just carried out, they also made about $570 million as well. So if you look at both the formal and the informal sector, I think we'll get more ground. And then lastly, the time frame would also have to be looked at. Most countries actually carried out this scheme, did it for a couple of years, either 2 or 3 years. And I know this is just a pilot for us in this country, but beyond the 9 months, I think we should also consider probably expanding it to maybe a year or two, so that more people can be captured.
On the issue of the time that it will take for the Inland Revenue to review the document and get back to the taxpayer, I think it is very important for the Inland Revenue to have a desk officers in each of their locations, so that we have dedicated staff that will have been trained and understand the VAID, so that as we are approaching them, submitting our documents, they will be able to review it on time and get back to the taxpayer. So that, for instance, now, if we submit a document and it is not reviewed or gotten back before December, that means it will enter interest period. And if it is not reviewed and gotten back maybe by next year, that means it will enter a penalty period, which is not going to be the fault of the taxpayer, but because of knowledge gap from the IRS officials that are supposed to handle it.
The question as to why interest and penalty will be paid after January, it's because we want to encourage people to do this exercise and not wait to the last moment. So for those who want interest and penalty to be waived, we expect them to do this exercise and have it concluded by December 31st of this year. A question was also asked, how long would it take for a response? Basically, at the point you put in your application, you can also make your payment, because it's a self-assessment, self-declaration, and we would like to assume that what you have said is true. In terms of whether the information will be kept confidential, certainly. We're all tax practitioners here. We have a code. We understand what it means. The question in terms of the extension, because we also blame in part of this, some companies have not been audited for 6-10 years. Quite true. Maybe because of the reliance on self-assessment and not effective monitoring, some fell through the cracks. Now, what we're trying to do is to try and make sure that no company that requires audit will have more than a 2-year period of, I won't call it of absence from FIRS staff. But in terms of the constitutional authority of between the federal and the state, they're separate. If you're found guilty of fraudulent returns, the state is empowered to go to the date of inception of your business. But under this program, if you come before they find out, and you come and declare for the 6-year period, then in terms of morality and ethics, they should be bound by that. But if they now find out before your declaration, then you're on your own. At the federal level, I can tell you, if you come and you're truthful for that period of 6 years, we will not look further than that. However, if we find out that your declaration is not truthful, of course, we'll do what is required. So for those beyond the 6-year period who want to take advantage of this opportunity comes now. Some people are implying that maybe this is just the first stage and we'll do another one next year. I do not think so. It is time for us to take up this opportunity and conclude our tax issues once and for all. And remember, you have up to 3 years to pay the established liabilities. But that is also subject to the taxing authority. So if your declaration is for state tax and you go in for a meeting with them and they say 3 years is fine, 3 years is fine, that's the maximum. At the federal level, you'll also do the same discussion and they'll agree whether it's 3 months, 6 months, 1 year, but it has to be reasonable for both parties.
The Federal Inland Revenue Service FIRS calls on all corporate organizations operating in Nigeria to register for the purpose of payment of taxes and obtain a tax identification number TIN. All registered companies must obtain a tax identification number immediately from the nearest FIRS office. You can also collect and return tax registration forms from the Federal Inland Revenue Service Engagement and Enlightenment Tax Teams, FEAT, on compliance checks exercise in your area. A company which is yet to commence business after at least 6 months of incorporation must pay a pre-operational levy of 20,000 naira in the first year and 25,000 naira for subsequent years to obtain its tax clearance certificate TCC. Note that filing and payment of VAT and withholding tax returns must be done on or before the 21st day of every month. Register for VAT. File all tax returns as and at when due. Be a responsible corporate citizen of Nigeria. It pays to pay your tax. This message is from the Federal Inland Revenue Service.
There were more questions, more observations, and more answers.
From a practical standpoint, there are some taxpayers who have issues. Perhaps they came to Nigeria, carried on business, went away. They never knew they had obligation. Some of them thought their obligation just stops at the withholding taxes that were deducted on transactions. And with the coming into effect of the VAT scheme, they are looking at, okay, I need some level of restitution. Let me come back to make good my records. In such instances where those clients do not have the withholding tax credit notes, but they have evidence to confirm or justify the fact that they did suffer those deductions, how can they go about it in mitigating against cash outflow because they already have a credit in place?
The panelists responded.
Before the chairman left, he mentioned that the moment you declare, you can actually make payments based on what you declared, even while the verification process still goes at the back end. But what you have to know is that the VAT is divided into two broad IT frameworks. So one is the VAT front-end facing application where people will go and fill the VAT form for both corporate and personal. And then there is the Project Lighthouse. So the Project Lighthouse was what I spoke about earlier, that brings out a lot of this information even before that taxpayer comes to declare his assets and his income. So in terms of verification, what you will be declaring will be compared. As soon as you fill that form online, will be declared or will be compared with the information that we already have about that taxpayer. Now, if there's no discrepancy in the value, or what has been declared is above what we have, for that particular taxpayer, then, I think you're pretty much good to go, except, during the data stewardship, some other thing is noticed. But if what you've declared is lower than what we have on file, then there will be need for further verification, even though you can go ahead and make payments immediately based on what you've entered before. So we should rest assured. So I went through a chart to show all the data points and data entities that we are going to use to normalize to get the kind of information that we need to get to have some sense of tax assessment even before people come to declare.
In the comments of many of the participants, there were calls for extension of the VAT grace period. Mr. Salami weighed in on the argument in this way.
I would like to take up the last question on timing because I think it's very critical. Now, this point was initially also raised by the CITM president in his welcome address or goodwill message. I think it's important that we also comment on it. Now, I'm going to talk about it from two different perspectives. And I align with him, but from a slightly different perspective. One, we've talked about the issue with people in diaspora not being able to key into this program because of glitches with the IT system. So clearly, 4 months into the program, nothing much has happened in that space. So obviously, there would seem to be an argument for an extension of time. The second perspective is from the standpoint of other jurisdictions that have implemented this scheme. Now, I've not done any scientific analysis. I have not done any scientific analysis to prove that. But there just seems to be a positive correlation between time allowed and success achieved in terms of tax collection. And I'll give you a very quick and simple analysis. The state of Massachusetts, United States of America, had a similar scheme for 54 days, and they raked in 33 million US dollars. If you just suppose that with Italy, it's a country though, that operated the scheme for 18 months, 1.5 years, a whopping 14.9 billion euros was repatriated to Italy, out of which 600 million euros was paid in taxes, 18 months. So it just seems as if there is sort of positive correlation between time allowed and success achieved in terms of tax collection. And you could see last year, FRS implemented limited amnesty for 45 days, and they got about 89 million US dollars. So the appeal I will make, and I believe the FRS guys are here, is just consider it. Do not throw it away. The appeal that, look, perhaps we may have to extend this deadline in view of those points I'm already raised. I'll go back to the point made by one of the attendees that, look, withholding tax, if it's excessive at 10%, and then you actually don't make profit, how do you recover that? Well, I'm not speaking for the FRS, but I think there is a procedure for tax reform now. First year, second year, you've suffered excessive tax, and you are not making profit. Clearly, tax is based on profit. So if you're in a loss-making position, and you have suffered withholding tax at source, I think you should apply for a refund. And I can tell you that FRS is more efficient now. We have applied for refund on behalf of our client, and they have gotten a refund. I can tell you free of charge. So if you have that kind of situation, please apply for refund, and I think your refund will be processed after verification.
Let me talk on the foreign company that has years of returns to file, and such a company can no longer lay its hands on the credit notes issued. I think we are all aware of the section 101 of CETA, paragraph 7, thereabout, say that we are a company that suffered such deduction and is able to prove it. Then to leverage on that, if you can prove that you have suffered such deduction to FRS, and it can be established, you can still claim your credit against your tax liability. Provided, you need to give the information about the company that actually will tell the tax at source. Our duty is to go after the company to confirm if they actually remitted to FRS.
The gentleman there said, after the deadline, will prosecution not be bogged down by the same slow, snail speed legal process? Fantastic question. We have the history of referring so many cases to court, but we are not getting prosecution. We are not getting some, unless areas where we have plea bargain. So that's an area where we may also leverage on. When they file charges against companies, against individuals, they may also do plea bargain. Because while you want to enforce, you also want the revenue. So we now have to combine civil and criminal procedure in order to get results.
Finally,
we're really appealing to you to work with us to ensure that this program is successful and we can get Nigeria put back on track. This is not just for tax revenues generation, it's also for building our nation. We need revenues urgently. We have a huge deficit to close. We've got 2 trillion as a deficit in the 2018 budget that was presented on Tuesday that we have to close. And this is one of the key areas we're looking to raise revenue from so we can close this deficit and deliver on the promises of this administration to the Nigerian people.
that will be all for now on the story of the Abuja training workshop for tax consultants on VATs. The story of VATs, of course, will continue on this program until the end of the grace period on March 31st, 2018. So, watch this program every week on this same station, same day of the week, same time of the day, for updates, for observations, for answers to your questions on the voluntary assets and income declaration scheme. Have a blessed week ahead and have a beautiful month of December 2017.